Welcome back. With rates low and construction booming in so many Australian capital cities, it does seem the prospects for commercial property have been brightening, and certainly the returns from commercial property are looking pretty attractive at the moment in light of jittery financial markets and, of course, residential property in parts of Australia looking like it really could be at a turning point. Is it right for you, though? And what's the best way to get into commercial property if you have had it on your mind? Well, Fred Nucara joins Prue and I. He's the director at Bella Commercial, and we welcome you into the show, Fred, so thank you so much.
Hi, Brooke, and hi, Prue.
Hi.
Thank you for having me today.
Well, thank you. And we talked last week about industrial property, so that was one side of things. But commercial property, I mean, we're talking to you today, what exactly does that involve, commercial property? What are we talking about?
Look, commercial property involves a variety of different investment types, small office suites, retail investments in your local strip, as well as some factories and showrooms that you see, often some homemaker centres. So they're the type of properties that usually make up commercial property investments.
So who is investing in commercial property right now?
Look, what we're finding at the moment, Brooke, there's really a number of different sectors that have entered the market, and a lot of them are cashed-up investors that have either sold their existing businesses and are looking for a passive income flow into commercial property. Another big group that's coming into the market is people that are looking to invest in self-managed super funds. And they're just looking at commercial property investment as an alternative to provide a decent return of passive income over time. And then there's also there's certain groups that club their money together and actually create small syndicates to go and buy commercial property.
Yeah, we might talk about that a little bit later, because that's one of the ways that people can get in. But I guess one of the questions is why? Why commercial property as an option, and why it's attractive at this point in the cycle too, right now?
Look, it's a very relevant question, Brooke. I think at the moment what we're finding is that there's a bit of a misconception that commercial property investment is only for the big end of town, the $10, $20 million buyers, but it's not. You can enter at a lower level. And the main reason is that interest rates are incredibly low on an historical level. So traditionally, for example, a residential investment loan would attract an interest rate of, say, 5 or 6% historically, but the commercial investment interest loan would be 3 or 4 percentage points higher. So that has been traditionally the case, but today we're finding that that variance is now less than half to 1%. So what we're seeing is that residential investment loans can be about 4.5 to 4% in terms of an interest rate. And believe it or not, commercial investment property loans can be achieved at as low as sort of 5%. So it's quite a compelling story to get into the commercial property investment market.
Are the risks the same, though? Asking from a completely, what do I know? But are the risks the same in the commercial zone?
Look, there's risk in any investment, but one of the pluses with commercial investment property is that you do tend to find that your leases are for 3, 5 or 7 years with accurate or increased increments every year on the rental. So what that means is that you're guaranteed growth every year, unlike, for example, a residential investment property which may have a life cycle of only 12 months. So what we're seeing is that some of these investors are coming into the market looking for better bang for their buck in terms of investing compared to, say, a term deposit at 2.4% or a residential investment at 3%. So getting back to your question, it is maybe a little bit riskier because of maybe a misunderstanding, but I think once an investor educates themselves about commercial property, they'll find that it's quite easy to get into and get a great passive income.
This issue of return on investment and income, because we threw that up as part of the reason that you might want to get in at the moment. But when you talk, and I think it's so interesting what you're saying about interest rates, because this whole search for yield, that's our buzz phrase at the moment in financial markets, isn't it? Rates are so low everywhere. Where do you get bang for your buck out there? So yeah, how do you kind of advise people on that at the moment?
Yeah, well, look, we obviously, being a commercial property agent that purely specialises in commercial property, do go to a great deal of length of advising clients what's good and what's not. But there's some basic principles that you can go about. And I think one of the things is working out what you can afford first. I think that's the starting point for anyone looking to get into commercial property investment. Sit down with your financial advisor and your bank and really just begin to understand what's required, because there is a 30% equity required when you are buying commercial property investment. So the starting point, in my view, is to just understand what you can afford over the longer term, because you're in the market for maybe 7 to 10 years with commercial property investment and not there for the short, quick gain. I think the second point, Brooke, is really taking time to understand the locational attributes of an area where you're looking to invest. Make it a bit of an adventure when you're looking to invest in commercial property, whether it's a retail investment or a showroom or an office suite. Get an understanding of the area. So some of the things you may look at is, for example, is the baker and the butcher and the candlestick maker and the banks and the post office all there? There's some really critical locational attributes that give a sense of vibrancy that your tenant's going to remain for the longer term. So that's locational attributes are one thing.
And how do you know about the tenants? How do you actually work out whether that you're going to have good tenants in a property?
Yes. Yeah, look, that's also a very key factor. Look, with tenants, it's very much important to get a bit of an understanding of their track record. One could be simply from your understanding of a local neighbourhood and a precinct, but you can actually speak to the selling agent who's selling you the property to get a rental history. That gives you a very good history about the tenant's ability to pay the rent over a long time or over a financial year, for example. Another thing that we often encourage our clients, and what we do, is actually talk to the tenant who runs the business, talk to neighbours who are neighbours to that business, and just begin to get a sense of their ability to remain and their ability to actually pay rent. Because believe it or not, the gossip amongst the neighbourhood can give you a bit of a guide.
That's a good rule for life, I reckon. Frank,
yeah, it is,
we are out of time, but I'm sure we can get you back another time. We can talk about different ways to get into commercial property. I hope we can do that with you. Thank you, Fred Nucara. Thank you.
Yeah, no problem, Brooke. Thank you.
From Bella Commercial there, joining us. From Melbourne, we actually stick with Melbourne, and a beautiful home in Templestowe in Victoria is up after the break. This property is going under auction. We'll have a preview next.